Morning, everybody. My name is Fred Nicholas. I'm the Farm Loan Chief for the state of Arizona. So I just wanted to share a little bit about myself before I go through the actual Farm Loan Program presentation. So I've been with the agency for almost 13 years. I'm actually born and raised in Guam. The first half of my career started out as a program technician out in Guam. Eventually, made my way as a farm loan officer, did some work and training out in Hawaii, American Samoa. So just a little context, since a lot of people are interested in my little USDA journey. So over here, what I'll do is I'll share my screen. So bear with me just a second. So let me know if you guys can see my screen. It says I am.
Yep, looks good.
Okay, so what you see over here, it's just a map of the Micronesian islands. So Micronesian islands, just for location-wise, Guam is right here. It's the biggest island in the Micronesian chain. It's north of Australia, east of the Philippines, south of Japan. So when I did work out as a loan officer out in what USDA coins it as the Pacific, or Farm Service Agency coins it as the Pacific Basin. So my area of responsibility covered Guam, this chain of islands to the north, which is the Commonwealth of the Northern Mariana Islands, Palau, FSM, which is the Federated States of Micronesia, and the Marshall Islands. Caribbean is not part of the area, but this whole area encompasses I was trying to look for it, but there was a map of showing the continental United States, and you can fit the continental US in this big land of ocean. So for me to travel to like the different islands over there, of course I can't drive. I literally have to fly to each of the islands over here. So going from Guam, you would have to take like an island hopper is what they call it, from Chute, Pohnpei, Koh Sarai, Kwajalein, which is an army base out in the Marshall Islands, to Majuro. So with the sitting in the tarmac for each different island would take me about 8 hours just to fly from Guam to Majuro. So yep, that's the first half of my journey over there. The second half, I came out to Arizona as a farm loan specialist in 2015, took over as the farm loan chief. So my responsibility is there's a state office that oversees the continuity and the layout and implementation of the Farm Service Agency programs. Then there are county offices that are spread out throughout the state that actually does the loan making, servicing. So I don't normally do the loan making and servicing. I just make sure that the key cogs of the offices run as efficiently as possible. So I will share my screen. Is it full screen on my end or your guys' end right now? Just want to make sure.
No, not yet. Yeah, still in the
thinking mode.
Yes.
We see your slide in kind of the PowerPoint program though.
Oh, is it the PowerPoint?
Yeah, it's not in presenter mode.
It's not in presenter mode. Let's see. Sorry about that. I thought I was.
I thought the same thing at the beginning. I also did something similar, so we're all good.
I'm like trying to operate 3 different screens right now. So give me a second. I apologize.
No, you're good.
Let me see what I can do over here. Where is my
do you have it up in full screen on one of your screens?
I have it shared on my there you go. Let me see what I can do over here.
Because if you have it on
I have it on another
screen.
So what I'll do is transfer to a different screen. And what I will do is share this screen, and I believe this should work.
Perfect. There we go.
Okay, fantastic. Not as hard as I thought it would be. So thank you for bearing me there. So as the other presenters that thank you for the kind words and everything. I hope that I don't disappoint your expectations of this. I'll try to convey the Farm Service Agency farm loan programs the best way I can. But if, since we have a smaller group from what I can see with the participants, please feel free to interject, and I'll be able to answer any question that you'll be able to muster up at this presentation time. So USDA Farm Service Agency, as everyone probably knows, is one of the 20 plus different agencies under the USDA umbrella. Farm Service Agency, just kind of taking a step back, it was built out of what you probably remember as Farmers Home Administration. So Farmers Home Administration broke into two, which one agency is Rural Development, which does the housing loans and other bigger business and industry loans, which Rick did talk about. And Farm Service Agency specifically focuses on the agriculture aspect of what Farmers Home Administration used to be. Farm Service Agency has two different sides to it, which is the farm program side that does with disaster related programs, other farmers assistant programs that may help mitigate the risks associated with different types of operations that we deal with here in Arizona and across the nation. I specifically deal with the farm loan programs, the financing side over here. So Farm Service Agency farm loan programs, there's two different types of loan programs. There's guarantee loans and direct loans. So guarantee loans, if you have some sort of familiarity of small business administration or rural development, guarantee loans are in place to help, commercial lenders provide financing for applicants or customers that don't normally fit their underwriting credit standards. So this means that someone like myself would have to apply at a commercial lender, and we do have a handful of different lenders that participate in our guarantee loans. So you would go to them, apply for their loan programs. Then the guarantee is that if they're interested in applying for the guarantee is in place that if a borrower was to default on their loan, FSA will pay up to 95% of that loss. So it's minimal risk to a commercial conventional lender, but it also helps them provide financing at a lower interest rate than what is offered through their regular programs. But for the most part, we deal with direct loans. Direct loans are made and serviced through our county offices. And I have a slide that kind of goes over the different offices that are out there. But overall, we look at three different things for our direct loans: eligibility, feasibility, and security. To kind of go over the farm loan programs in general, these are the four different programs that we do offer: the farm operating loans, farm ownership, youth loans, and emergency loans. So the farm operating loans, these are the typical use of our farm operating loans. So it can be something as small as your feed, seed, fertilizer, all the way up to your intermediary assets, machinery, equipment. Depending on the use of the loan funds for the operating side would dictate the term of the loan. So for your annual operating loans, your feed, seed, fertilizer, terms for that loan typically run 12 all the way up to now. They recently changed it 24 months because you want to be able to get your operating funds, put it into the ground, harvest your commodities, sell it, and pretty much pay the FSA loan, and whatever remaining that you do have can be reinvested into the operation or at your discretion, whatever that you feel like you need to spend the money on. For for your bigger type of loans, your term operating loans, your machinery, equipment, breeding livestock, that can go up to 7 years. There you go. There's a $400,000 loan limitation for it that has been recently increased the last few years. It used to be 300, now it's 400. So it's that increase has created more of a incentive for a little, because sometimes $300,000 for annual operating loans for a lot of our alfalfa hay producers, it's a drop in the bucket. Interest rate, which is a common question that most people ask, is right now our interest rate is 2.75. It's lower than what you would see for most conventional lenders and most consumer loans, and the interest rate is fixed. So we look at two things. So if you get approved in April at 2.75, and let's say you close the loan in May, and it goes down to 2.50, you get the lower interest rate of the two interest rates. So you always get the lower interest rate of either approval or the closing time. Farm ownership loans, these are typically used for your real estate purchases. There is a $600,000 loan limitation. It used to be $300,000. Loans can be repaid up to 40 years. Interest rate for the loans, for the ownership loans, is 3.25%. So I'd like to go into this a little bit more because if most people are kind of familiar with how interest rates work, that this 3.25% kind of mirrors your typical primary residence loan. But if you're looking at commercial property or agriculture property, especially when it's associated with vacant land, most lenders with typical rates and terms would ask you for 30 to 40% down payment. It's a lower term loan depending on your credit. I've seen 10 to 15 year type of loans at 8% up to 15%, depending on how good your credit is. But the farm ownership loan is probably one of the most, one of the best lending programs I've seen, especially when it comes to real estate, because we can finance 100% of the appraised value. So for an example of $100,000 property that you're purchasing, if it appraises at 100,000, we can finance 100,000, and the only thing that would come out of your pocket would be title and escrow fees, which is a variable cost, because the higher the purchase price, the higher the title and escrow cost would be. And on top of that, for typical real estate purchases, whether it be like primary residence or commercial, it's usually the customer that pays the appraisal. FSA pays, USDA Farm Service Agency actually pays for the appraisal for these transactions. Excuse me. A few years ago, there's other programs that were available or rolled out. Microloans are a good gateway or entry for a lot of producers that are starting out or looking to take the next step. These mirror or is kind of like a branch off of our regular program. So there is a micro loan farm operating loan, and there's a micro loan farm ownership loan. The keys to this is that the intention of it is to be a lower documentation type of streamlined loan. The only caveat to this is that there's a $50,000 loan limitation. So any loan that comes in for like a new bar or a new applicant for a farm service agency and it's $50,000 or lower, you would be required to submit less, and that's the intention of the microloan. Other loans that we do offer, just more for informational basis, is that we do offer rural youth loans. So our youth loans, the intention of this is to provide two different goals for children that are 10 to 12, 20 years old, is to provide an understanding of how loans really work. So a young adult young teenager would actually have to go through the application process, understand what's required, which is, of course, for the youth loans, it's very little paperwork that needs to be filled out, but just for them to understand there's a process to apply, to get approved and actually close, and they actually sign off on promissory notes saying that, based on their loan, and it's up to $5,000 at interest rate, and they'll pay. But the thing that we try to do with our youth loans specifically is to try to make it as easy and as smooth as a process as much as possible. So the FSA loan officer that will be working with the kids are the kids are usually associated with a agriculture group like 4-H, FFA. So we work with the advisors, we work with the parents to let them know that we're going to try to make this as successful as possible. So we're in constant communication with the advisors, the parents, to see how they're doing. And what we try to focus on is shorter term type of loans. So even when I was a teenager myself, my attention span wasn't as good as it is right now. And usually for kids, they want to see kind of the pot of gold sooner than later. So a lot of the projects that we do work with is associated with 4-H projects where they have a county fair that's early around this time. So we try to get the kids in the system and to work with them in the beginning of the year, allow them to get the funds that they need. Then the culmination of all their hard work comes usually during the county fairs. Emergency loans. This is another program that we do offer over here. So the emergency loans, the intention of the program is if there was a disaster that hit a specific producer, that the loans are in place to help that producer go back to pre-disaster conditions. For the most part, with Arizona, most of the declared disasters, whether it be presidential, secretary, or administrative, are associated with drought. But we all know here in Arizona, everything is irrigated. So the only times that disasters are declared that might be applicable were probably some of the torrential rains that happened last year. There was like a situation out in Graham County where they've had like pretty bad hail. So if there's declared disasters and you experience either physical or production losses, those loans are in place to help you get back to what they were. But because that the interest rate is this interest rate of 3.75 is set through Congress. If you saw with our operating loans, their lower interest rates hovering around that 2.5 interest rate. We try to go through the lower interest rate because the payment will be lower for our producers. Questions so far? Anybody? I'm not able to see the chat, so I can't because of my PowerPoint slide. So Taylor, if there's anything, just let me know. Otherwise, any questions so far?
Nothing that I see yet.
Okay, fantastic. Just want to make sure it's a good stopping point before I move on. The next slide over here, like mentioned, there's 3 different things that we look at for any FSA loans. The first slide that you see over here is eligibility requirements. So I'll give you a general overview of the eligibility requirements, and of course everyone's situation is different. So we'd like to try to have a running conversation with the applicants that we will be working with. So to understand their circumstances specifically. So some of them are pretty self-explanatory. There's some of them are like permanent resident or citizen of the United States. The next bullet point over here is something I like to go over is be unable to obtain sufficient credit elsewhere. So that doesn't mean you have to go to a lender to get a denial to come to us. If you feel like you can't get commercial credit with or without a guarantee, go to our county offices and let them know the situation. Because once we start evaluating financial information, we have a good understanding of what lenders look towards, because a lot of them mirror the same underwriting standards based off of debt to income ratio, asset ratios. So we were able to compute some numbers and see if that might be an available option, but that's a question that is usually asked from most people. The next bullet point over here, possess legal capacity to incur the loan obligation. So this pretty much means you have the mental state to understand what a loan is, an application, and understand the rules and responsibilities of what it may require out of you. The next one, applicable education, training, and or farm experience that provides reasonable prospect of success. So depending on the loan program that you do offer, I know Rick talked about some experience requirements as it relates to the loan programs. That usually is more applicable for the farm ownership loan, the farm operating loan, the microloans. So the way that I kind of explain it is that there's usually a certain expectation with our loan programs. So someone coming in for a microloan program, you wouldn't expect somebody to know inside and out how the loans work, but someone coming in for maximum $600,000 ownership loan, $400,000 operating loan, I would expect that person to know inside and out how the operation is going to work, because the fall coming from $1 million loan is significantly higher than someone coming in for a $25,000 microloan. Other eligibility requirements: not delinquent in any U.S. federal debt like student loans or any other agency loans. If they were a previous borrower with FSA, no loss, or loans that were forgiven. Acceptable credit history. So this is another one that I go over, because everyone's credit history, everyone's financial background is different from one another. So depending on your how the credit report looks, if there are certain isolated problems in credit history, we can work with that as long as there's a justifiable reason, loss of job, family emergency, medical emergency, something that suggests that there's rationale and some logic behind previous debt problems. Otherwise, if there's like a credit report and month in and month out, there's delinquent, that usually shows that an applicant is not able to keep up with their credit obligations. But again, that's a running conversation that I would recommend to have our producers or applicants talk about with our loan officers. The last bullet point over here, definition of a family farm after the loan is made. So this last bullet point over here is specifically made just to make sure that there's not these big corporations, your Dole, your Tyson type of corporations taking advantage and leveraging the loan programs. We just want to be sure that the operators that are undertaking the loan programs are the actual producers that are running the business. Feasibility requirements. So this is the second portion to the loan programs over here. So it doesn't matter if the loan is $1 or a $600,000 max farm ownership loan, there has to be a plan in order to repay the loan. So these are three things that we look at specifically for each application. The first one is a balance sheet. The balance sheet is a snapshot of the current financial condition of the applicant at the time when we get the information. So assets minus liabilities equals equity. So we gather that information to understand what the financial picture is at the time when we receive the information. Income and expense projections. So depending if a operator has previous history or no history, what we're trying to do is create a moving picture of the applicant's financial income and expenses over time, so we can understand the variances of income, the variances of expenses, because what we try to do with that information is create a realistic projection to say, okay, based on what you made in 2021, I'll give an example. You made $50,000 in 2021. What do you feel like is going to be projected the following year? Are you going to make more? about the same or less. And we go through each individual number and understand why, if there's going to be changes, or why is it going to stay the same. And we'll go down the list, or at least try to develop a plan for new and upcoming producers to make sure that it's realistic based on the type of operation that they're running. And that goes side by side with verifiable yield and price information. We try to understand the markets in which our applicants are going to be selling in, what prices are they projecting. And we try to, like for livestock operations, there's the auction houses, depending on the region and where you're planning to sell the commodities. Maybe we have an understanding of what certain places are purchasing at, or if you're demanding a higher price, what's the reason behind it? Is it organic? Are you hitting a certain niche? What's commanding the higher prices? And lastly, meet FSA loan collateral requirements. That's security over here. So something as simple as, like, let's say purchasing real estate will be the security for the loan. If it's operating funds, if it's like annual operating funds, your feed, seed, fertilizer, we can take crops. If it's breeding livestock, if it's equipment, we can take livestock as security, machinery, equipment. So it's a case-by-case scenario, but kind of the same central theme with some of the things that we were saying. For us to fully understand the situation, create that running conversation with the loan officer that you'll be working with. Just tidbits over here, application tips, just to be better prepared when you do talk to the local county office over there. Just have an understanding of your farm operation, your cultural practices. Everyone operates differently. What makes you unique to everybody else? Short, and long-term goals. Plan conservatively. We have an abundance of information out there. Sometimes a little too much to absorb. But the first thing to do is, what I appreciate when people give me a call periodically is just the courage to understand what's out there, because half the time is knowing what's out there, and the other half is how to go about it. And lastly, good financial and production records are important. This is going to be able to help you convey the information that FSA may ask, and it also helps you understand how the operation is going. Be your own advocate for your income and expenses. Don't solely, some people rely solely on bookkeepers and accountants, but like anything else, the bookkeeper and accountant is only as good as you want them to be. So they may or may not be filing everything that you want them to file, or they may be missing information. So take a good hard look as far as what can be acceptable for record keeping practices. Disclaimer, I think Rick talked about it a little bit, was program funding. Our loan funds are appropriated through Congress. I know he focuses on beginning farmers and socially disadvantaged loans. So I like to provide some clarity as far as those type of programs go. There's, the way that media kind of puts it out there is that there's a separate loan for beginning farmers. There's a separate loan for socially disadvantaged loans. There's a separate loan for, let's say, veterans. That's not the case. The way that the beginning farmer or SDA categorization kind of works is that depending on how you declare yourself in our applications, this pool of funds that Congress gives FSA to provide loans, it gets divvied up into different smaller pools. So there's a pool for SDA beginning farmers. There's a pool for non-SDA beginning farmers. And there's a pool for non-beginning SDA farmers and non-beginning non-SDA farmers. So it's just to ensure that there's enough money if you do certify yourself as SDA, that there are going to be funds. So the only also another tidbit on this is that The only time when loans may be exhausted is usually during the end of the fiscal year. So that doesn't mean your loan would go through if it's approved. It will just take a little bit of time to get the funds to obligate and allocate to your loan request. It hasn't been a problem in recent years, but the longest that I probably waited for loan funds, and that was quite a few years back, was probably a couple weeks at most. But we have mechanisms to help kind of create a temporary bridge if that might be a problem. Other tidbits and useful information, how to get started. Applications are available at our servicing offices or county offices, and we are able to help you out with any application needs if you have any issues filling it out. During my whole career here in FSA, there hasn't been one person that has been able to fill out the application 100% correct. So don't feel obligated like I have to get everything correct. If you do need help, let us know and we'll be able to help you fill in the gaps there. Again, ask any questions or if you need assistance from the county offices. Just little tidbits over here as far as, FSA partners that we do work over here. Again, we do partner up with U of A. Also, the Small Business Development Center is also a good resource for you to get some help, because it's a branch of Small Business Administration, SBA. So their intention and how they work is that they provide a free service to help you build business plans. We do have quite a few in the Valley and peppered out outside the Valley. So I would recommend, if you are interested to get some assistance with creating business plans, this program, this network, small SBDC, is a good program. It's just a questions slide over here. Then I'll just kind of briefly go over the county office. So I'm based out of the state office in downtown Phoenix. The Maricopa office covers, so if you see an asterisk by the county office, that means that is a farm loan program staffed office. So Maricopa covers Maricopa, La Paz, and Yuma. Pinal Pima covers Pinal, and they're based out in Casa Grande. The Maricopa office is based out in Avondale. There's an Apache office, a satellite office in St. John's. We do have a farm loan program staff members in the Cochise Santa Cruz office, which is based in Wilcox. They cover Cochise, Santa Cruz, and Graham. We do have a Flagstaff office that covers Coconino, Mojave, and Yavapai. Graham and Greenlee, there's a Safford office, and our Holbrook office in Navajo County covers pretty much the whole northern part. Navajo, Gila, Coconino, Mojave, and Yavapai. We also do have a county office out in Yuma, but our Maricopa office in Avondale services the Yuma and La Paz counties offices over there. So outside of that, that is my, let me see if I can share. If I do have it. I don't think I have open, but what I was going to show you really quickly is just the servicing areas for the offices. If it's going to share, I think, yeah. So this is just a nice graphic as far as the servicing offices for the FOP side. So like I said, Avondale covers these three counties offices over here. The office in Casa Grande covers Pinal and Pima. Wilcox covers these counties over here, and our Holbrook offices covers the whole northern part of Arizona. So outside of that, that's pretty much all I wanted to present. And I am open for any questions or answers. I hope I didn't take a significant amount of time, but I know we're running a little early. So